Alrighty, this next panel is going to be a link to Fireside Chat. We've got the CEO of Polysign, Jack McDonald, tuning in virtually, accompanied by Link2 COO Joe Indoso, Robin O'Connell, CEO of Enterprise Uphold, and the panel will be moderated by the one and only Will Petruski, Senior Vice President of Link2 Sales Team.
Thank you, buddy.
Thank you. Thank you, guys. Good luck, Joe.
Thanks, everyone. It's a pleasure to be here. It was great to be here last night and meet so many people I've spoken to on the phone dozens of times, and look forward to meeting many more of you this evening. By our calculations, about 20% of the room are in fact Link2 investor members. If I could see a show of hands. All right, excellent. Excellent, welcome. We've got a little work to do, but that's a nice showing. I'd love to start with an observation. I was lucky enough to have one of the great jobs in the world. My first job in sales was selling grilled cheese sandwiches at Grateful Dead shows. And it was better than it sounds. And the reason it's actually relevant was because the lasting impact of that experience certainly wasn't the music. It was the that we created. You know, we became an integrated part of the daily experience. I mean, historians cannot talk about the Grateful Dead without talking about the Deadheads. So while the chosen attire may be different, and the odor in the room is significantly different, the energy and the vibration is quite remarkably similar. And I want you all to feel that. And I wish somebody had told me 30 years ago, because it could have helped me contextualize a real-time experience. They could have said, son, welcome home. You have found your tribe, and it is all around you. And I say that to you. So. Yeah. All right, talk about making history. We have 3 history-making companies on the panel today in their own individual sectors. We've got my colleague and COO of Link2, Joe Indoso, on the far end. Robin O'Connell, CEO of Enterprise at Uphold Incorporated. And we've got Jack McDonald, CEO of Polysign. Jack, we know you can't be here today. We thank you for carving out the time to talk to us. I'm going to start with you. Please, for those who might be less familiar, can you give us an overview of Polysign, what it does, how its custody solution is SEC compliant? Oop. 1 second, Jack, I can't hear you. Not yet. I can see you, but not yet.
I think you're on mute.
Not yet, Jack. Why don't I let the guys in the back work on that, and I'll move on briefly. Robin, we'll talk to you first, please, if you don't mind.
It's a tough act to follow.
Yeah. Please give us an overview of what makes Uphold so different from other digital asset platforms.
Sure. So first of all, I'm the CEO of Uphold Enterprise, and so I just want to make that clear so I don't get fired. I'm not the CEO of Uphold. But many of you have heard of Uphold because of our retail wallet, right? Like and our big mantra is anything to anything. And we're obviously, hopefully, known here as, you know, really one of the only places that you can buy XRP in the United States, at least easily. I will, you know, I'll pander to the audience by just giving a little bit of background on that too. We not only were the only ones that basically didn't cave and delist, we were the first ones. We were a year and a half ahead of Coinbase in terms of listing XRP and integrating into the XRP ledger. In our history, and I've been there since 2015, so I'm part of the OG there, is, you know, we've always had a really tight bond with the XRP community. And so it actually is really exciting for me to be here and having talked to so many of you in the last couple of days. Anyhow, so a thank you to the community here from Uphold for standing by us, and we hope to continue to serve and grow with you guys. What was the question?
What makes you different from other digital asset
different?
platforms?
Okay, here's something that makes us different. So, and then I'll explain the whole retail side and the enterprise side, because I run the enterprise side. One of the things that makes us different is when we launched the Uphold back in 2014. Some of you know this, and if you don't know this, go check it out. But if you go to uphold.com/transparency, you can see real time all of the assets that are on our system, okay? And we're always over reserved, okay? And why did we do that? Well, we kind of started out of the whole 2008 financial crisis. I mean, I don't have to explain to the audience that, the way banks work is that if you give them $1,000, they're only holding $100, and then they're taking the $900 and lending it out. And of course, if everyone says they want their money back, well, that's what a bank run is. Kind of sounds like a Ponzi, right? So I'm gonna get in trouble. This is awesome. It's a Saturday. No one's right. It's okay to talk. But so that was core to our beliefs, and I think that's what makes us different, right? Is that the transparency, and then I also would say, and because some people ask me about this too. So 95% of all of our assets that are on our system are either in banks or in cold storage. And so somebody said, well, what do you feel about the fact that people will go on and then use your system and then send it off? And I say, well, that's fine too, right? Because you got to be safe, and you got to be diversified, and you would never want to keep all your money in one place, anyways. But I do want to say that that's our mantra. That's how we're different. And it's interesting, when the whole FTX thing happened, right? And shut me off too, by the way. Keep talking. Is all these exchanges and wallets started scrambling to effectively do the same thing that we'd had up and running since 2015 or 14, when we launched with this transparency page. And so I'd say that those are the key differences.
Awesome. Jack, do we have you back?
More time for me.
No, all right, we'll keep moving. Hopefully we get Jack back. Joe, my colleague and dear friend, please give a brief overview of really the experience of the Link2 investor, how it works, how Link2 acquires private equity, maybe what is an SPV, and what happens when there's a liquidity event or an exit.
That's a lot of questions, but I'll try to answer, hopefully in the order you asked them will. So our mantra at Link2, if you guys aren't already customers, is private investing made simple. And that word simple is really critical, because in the real world, private investing is anything but simple. It's a really complicated process trying to transact unregistered private company stock. Right? There's a whole bunch of legal, financial complications. You've got to get the consent of the issuer and their board. The transactions are costly, they're timely, and they're always subject to closing risk, because companies typically have something called a right of first refusal, which is to say that if I'm an outside guy trying to buy stock from an insider, somebody that's already a shareholder, the company has the right within a certain period of time to basically match my offer and buy that stock in place of me. So I can theoretically, well, actually practically, because this happens to us a lot, I'll be in escrow on a couple $1 million, and then at the end of that 90 or 120-day transaction period, find out that the company decides to exercise that right of first refusal, match our offer, and we end up with no deal. We get our cash back after it's been sitting, right, not earning a return for several months and no deal. So we've set up a system at Link2 to basically insulate our investors from ever having to go through that experience and that brain damage. On Link2, you basically open an account. Once you go through our AML KYC and get qualified as an accredited investor, you can literally click to invest. The offering is there, you click, you're done. And that's frankly an experience that is unparalleled and unprecedented in the private markets. And the other thing that's unprecedented is because we're fractionalizing these investments, we're not asking you to make the $5 million investment that we've already made with our own money, our own capital. We're saying just put in $5,000 or $10,000 of your money. We're making it accessible in a way that, again, has never been done in this space before, because it's always been an institutional market, right? So at the end of the day, what Link2 really is about is the same thing that crypto is about. It's about democratization. It's about opening markets up to people that for the longest time have been barred from them. It's about giving everybody an equal opportunity to create wealth. And hopefully we're able to do that for those of you in this room.
Thank you, Joe. It's a great service.
Who said that? Where did that go? Joe, expand a little bit.
I think Jack just got
There we go.
back on.
I just came through.
Oh, thank goodness. Good. Jack, welcome back. Let's go back to that initial question I asked you. Would you please give us an overview of what Polysign does and how its custody solution is SEC compliant?
I'd be happy to, and I just want to say at the outset, thanks again for having me. I'm sorry I'm not there. XRP in Las Vegas, two of my favorite things in life. And I will also, in full disclosure, in full disclosure, as long as we're sharing, I actually have been to a dead show in Las Vegas many years ago. The real dead. I don't think I had one of your grilled cheese sandwiches, thankfully.
You know it.
But near and dear to this crowd, Polysign was founded 5 years ago by Arthur Brito, who was a co-founder of Ripple, together with Chris Larson and Jed McCaleb. Arthur had a vision around building an institutional-grade infrastructure business, joined by David Schwartz, Ripple's current chief cryptographer and CTO. I joined really day one from a fintech background, and what we set out to do was to build institutional-grade financial services to allow institutions to invest into digital assets, broadly speaking. Cryptocurrency was the lead story, although the capability and the functionality extends to tokenization as well. So I really enjoyed hearing the other panel. I was just at a conference in San Francisco this week where I'm based. The lead story, just amplified time and time again, was around tokenization. So we can talk about that because we very much have a role to play in that future ecosystem. To your question, we have three businesses under the umbrella of Polysign. All the equity that we've ever sold has been at the parent co level. My equity is at Polysign level, Link2's equity at the Polysign level. And three businesses. First off, the custody business called Standard Custody and Trust. We are a qualified custodian in New York. We meet the threshold of qualified custodian. That's ever more important given the recent SEC pronouncements, which I'll come back to. We also last year bought the leading fund administration business for digital assets called MG Stover, an enviable list of top-tier clients who invest in the digital asset space. And those businesses very much go together, hand in glove. And then the third business is Atomic Net, which I call our moonshot idea, which is really the play towards tokenization, allowing for instant and atomic settlement between a very diverse group of assets. Could be crypto, could be fiat, could be a fractional interest in a private company, a real estate building, a fund, etc., and allows for that transfer of wealth in an atomic way. So in other words, everybody passes or everybody fails. And we think that we're playing a meaningful role in helping to rewrite a new operating system for capital markets. Just double tapping on the SEC custody rule, Gary Gensler and co. a few weeks ago came out with proposed changes to the custody rule that, if accepted, would have a pretty profound impact on registered investment advisors in the U.S. and qualified custodians. Important to note that the proposed changes, while the talk has been around the impact on crypto, it actually would impact all qualified custodians. And particularly, I care about those in New York, like Fiduciary Trust, Brown Brothers Harriman, et cetera. And basically what Gensler and co. said for the first time is that registered investment advisors under the 1940 Act can invest in crypto and digital assets. He had never said that before. So that's, I think, a big win for the industry. Second of all, he said that if you do want to invest, similar to equities, you must use a qualified custodian. And then he went on to articulate a number of tenets that qualified custodians would have to meet the threshold of these new proposed changes. And without going into too much detail, they have to do with segregated accounts for clients, no commingling of client assets with the house accounts, routine reporting, a lot of contractual language around having insurance, indemnification, and also having control of the asset through settlements. And fortunately, we really meet all those different criteria that exist, not only by being registered in New York under the Department of Financial Services, but also the way we set up our business from day one, really to be conflict-free. Some of our competitors have an exchange, they lend, they borrow, they trade, they market make, they broke, and we don't do any of those things. So we're really a neutral platform. We want to work with liquidity providers. We want to work with the Upholds of the world. We want to work with exchanges who don't have their own custodial platforms. And so we're quite excited about our future here and the sort of things that we think we're going to be able to bring to the market there around custody.
Thank you, Jack. Robin, coming back to you. Why do you think other platforms removed XRP, unlike Uphold? Was it the fear of the SEC? Were they instructed to do so by the SEC? Expand upon that a little bit.
No backbone.
Yeah.
No. I guess I would reiterate that question was kind of raised in the last panel, and until there's a ruling, mm-hmm. there's no action to take, right? Mm-hmm. So that's
about all there is to it.
That's about all there is to it.
All right, awesome. Explain, talk
Can
a
I
little.
also just add, we are open for business for XRP as well. We had been planning to support XRP from day one. Right when the lawsuit was filed, it was really the time we were launching the business, and out of an abundance of caution, perhaps a limited backbone, we chose to hold off on that, but have since decided to support XRP until there is a ruling that would dictate otherwise. It continues to be an asset that is supported and on the green list of assets at the DFS, and so we're open for business for institutions who want to custody XRP. Give us a call.
Excellent. Robin, staying with you for a minute, can you explain Uphold's B2B solution for payments?
Yes.
What are the target markets?
There you go. Sure.
Go ahead.
So, people have experienced Uphold on the consumer side, and all the things that you can see in the app basically are capabilities that are in a platform. And what my group does is we try to find use cases where those capabilities can be deployed for other companies. So, Brave is a great example. That was one of our first large enterprise customers. They have, if you're not familiar with it, it's a privacy browser and an ad network, and you can earn basic attention token sort of as an incentive. Now, if everything sort of stays in this closed loop where I'm earning basic attention token and then I tip, let's say, the website, that's all sort of fine and not necessarily regulated. But at the point when Wikipedia, who's on the Brave network, is getting all these tips, and they want to convert the basic attention token into dollars and put it in their bank account. That's where we come in, right? So we're that regulated bridge. Wikipedia has an Uphold account. They're getting paid in basic attention token. It converts into dollars, and that's really the utility that we're providing there. On the other side, you've got the millions of people that are receiving these basic attention tokens. Sometimes they want to tip somebody else, but then sometimes they just want to take that money and buy a coffee at Starbucks. And so to do that, to take it off the platform, you have to go through our system, which is regulated and licensed. So if you're in the US, these are money transfer licenses, et cetera. And then we just have a really easy system to go from basic attention token to dollars into your bank, or you could even go basic attention token off the ERC20 network to another exchange. It doesn't matter. And so it's really, that's an example. Another great partner that I like to highlight, we were talking about metaverses earlier. There's a metaverse called IMVU. It's like a Second Life, if you've ever heard of it. And what I like about it is that they have 8 million monthly active users, right? So I like to partner where, it's like fish where the fish are, right? You want to partner where it makes sense and where there's going to be a lot of activity. And with IMVU, they already had this metaverse world where you would buy these sort of in-game currency, but you could never take the currency out. It was stuck. They actually have the last SEC no action letter that says, hey, if you want to take that, in metaverse currency and you want to actually turn it into a cryptocurrency and exit it and have value, this is how you do it. And you have to partner with a company like an Uphold. And so we did it with Brave, we did it with InView, we do it with other companies. Mythical Games comes to mind. That's an NFT marketplace. So whenever there's a digital asset, we can support it through the liquidity and make it really easy for everyone, right? It's only going to be, we're only going to see mass adoption when it's just dead simple, and that's what we try to bring to the party. You get these great sort of non-custodial, decentralized, et cetera, et cetera. Oh, we're going to be Web3 and then connect your wallet. What portion of the population do you think has everyone here does, of course, but if we went to the hotel next door, what percentage do we think actually has a non-custodial wallet? So we're really about sort of bridging, making it easy, and doing it with all these guts of infrastructure that we've had to create, and then offering it up to other companies. So we're kind of like the backbone, to use that word again, for a lot of these projects.
Excellent. Joe, you're a historian, much like myself. What similarities do you see between the early days of the internet and today's emerging digital asset space?
For me, the thing that strikes me in looking back is that if you recall in the early days of the internet, and I think a couple of guys on the stage earlier had spoken about this phenomenon, right? The vast majority of people, when they were first introduced to this concept of a World Wide Web, basically thought it was completely nuts or unreal or both, right? And ignored it. I mean, you can look back and maybe use Chat-GPT, pull copies of articles in the early days of the net, and you had all form of cynics questioning whether this thing could ever actually displace mail, letters, certainly not commerce. I mean, who would ever want to shop except in a store, right? We look at that now and with a certain amount of, just sheer disbelief that people could be so ignorant. And I guarantee you the same thing is happening with digital assets. We're going through exactly that same cycle today. Everybody in this room, myself included, who's a holder and an investor in those assets, is probably looked upon by many in our social circle, our professional circle, even our families, as being curious or just outright lunatic, crazy. Right? I mean, you guys know what it feels like, right? But I can tell you that every fundamental technology innovation that's ever happened in the history of time has gone through this cycle. This time is no different. And it's the reason why, for example, we at Link2, we're fundamentally securities and a brokerage business. We are also implementing a vision that is going to take us to that same blockchain and turn the assets that our customers currently invest in into digital securities that will be available in a wallet like Uphold, no differently than native crypto tokens, and will clear and settle with other institutions on Jack's Polynet wholesale clearing network when it gets built. Because that's the future.
Thank you. Excellent. Excellent. Jack, if we can circle back to you. You mentioned in a recent interview that Polysign might be a good tuck-in acquisition for another company as opposed to an IPO. Can you give us a few examples of what types of companies you think might be interested in an acquisition like that?
Yeah, when we set the business up, I think for private companies, you have to think about an exit, right? We have professional investors who have an exit agenda, and that's something to embrace and just to think through, in terms of how you build the company. And from day one, we always envisioned building a company that would be attractive to strategics in the same way that traditional capital markets have a precedence around large custodial banks that start with custody and then have this surround sound of other value-added services that are built upon that foundational layer. And that was the motivation to buy MG Stover. It's the motivation to do some of the other product development and service development things that we are building, because our view is that the big banks move slowly. We all know that. It's not a criticism, it's just an observation. They move when the buy side presents themselves in a way that they really need big institutional grade responses to them. So when the largest asset managers on the planet start talking about tokenization, for example, like the BlackRocks and the PIMCOs and the Aberdeen Standards and others that are all prolific and public about how they see the future, the sell side will scramble to get there. And we know how difficult this technology is to build, is why I think ultimately a likely buyer for a company like ours down the road will be the big banks, who will look at a buy versus build sort of equation and come to the conclusion that speed to market matters, and that buying this technology and expertise and know-how will accelerate their strategic plans. It's not the only outcome, but I think it's a very likely one.
That makes perfect sense. And for greater context, we know you can't share who your customers are, but can you give some transparency to the types and sizes of the companies you work with? Any governments or CBDCs?
Yeah, so 3 different businesses. In the custody business, standard custody, it's all institutional. So by our charter, we don't support retail directly, and that threshold is an accredited investor and beyond. The market structure is changing in digital assets and crypto, and more of our clients, we think going forward, are going to be channel partners, if you will, exchanges, trading desks, DeFi platforms, lending platforms, etc., in addition to crypto native funds or traditional investors who want to buy and hold a digital asset. In the fund administration business, it's funds who invest for the most part, not exclusively, but for the most part in digital assets, Web3, crypto, both liquid and illiquid. So it's venture capital, it's private equity funds, it's some family offices. Increasingly, we're starting to work with some pensions and endowments or corporates. And then on the atomic net side, that's really a wide range of potential participants. That will be individual investors, it will be service providers, it will be market structure players who could be exchanges, could be clearing houses, could be any number of just different global infrastructure sort of providers who need the sort of toolkit that our engineers have been building.
Excellent. Thank you. Robin, once the Ripple case is over, if XRP were to see an increase in value, do you have any advice to your customers on cashing out if they're looking to take some profits?
Investment advice?
Would it be important for them to move assets off the ledger prior to that happening?
Oh, yeah. I think I'd go back to what I said before. I mean, your funds are safe on Uphold, but if you like to use a ledger, then we just want to make it easy for you.
Sure.
Or if you want to convert it to USD and put it in your bank account, we want to make that easy for you as well. So, yeah, I mean, I think that hopefully it's not a rise and then everyone just gets out. I think that the important thing with XRP, and I think it was said earlier, and I thought it was said quite well, that it's not just about like the price. Obviously, a lot of people have benefited from that. But if this is really going to be, so if this conference is going to be going for the next 10 years, then all of these projects that we're hearing about have to succeed, right? They have to have adoption, they have to work, and you have to have the XRPL actually drive fundamental real-world use cases. And that's, I think, and I'm going to slip in a little pitch because I forgot to say it. So we just launched last week Topper, and kind of taking that story I was telling earlier about the capabilities is we'll compete with the MoonPay. I think that came up earlier. But we want to be, the on-ramp and off-ramp, the easy on-ramp and off-ramp for all of these XRPL projects, right? So because we tend to forget, like we're thinking about everything like once it's on the XRPL, but guess what? Where's most of the money? It's not on there right now, right? And it's got to get there. And so we want to make that really easy through. And so what this is it's basically a compilation of different capabilities and licenses that we already have at Uphold without you necessarily having to go and get a full-fledged Uphold account where you're custodying your assets. It's just, I want to pay for X amount of XRP because I want to participate in this project, and it's almost like a Web 2 checkout. How much do you want to buy? How do you want to pay for it? This is where we're going to send it. Boom. So excited about that, and we actually are launching it with several of the names that are up there on that list. Nice. So excited about it. Yeah.
Excellent. All right, Joe, would you like to talk a little bit about the ATS, the alternative trading system that is emerging at Link 2?
Yeah, it's really early days, but the ATS, or alternative trading system, is something that we recently received a regulatory approval from the SEC to operate. And what that's about is solving, again, one of the fundamental barriers to regular people like us in this room investing in private assets, which is that they're illiquid, right? So if you've got to make an investment in a company and it's, call it 3 years away from an IPO, you're sort of stuck for an extended period of time. And the thing about it is that if you're an institution, that's not a very big deal because you simply set aside an allocation from a massive portfolio and you say that money's locked up for 3 years and you move on. But people are different, regular people like us, because life happens to us, right? Mom gets sick. Junior has to go to college and doesn't maybe get the scholarship money he thought he'd get. Your wife decides she wants that second vacation home. Whatever it is, your plans may change, and as a result, that investment you made that you thought you'd be able to hold on to for 3 years, you may not be able to, right? So the ATS is about solving that problem by giving our members the ability to systematically liquefy some or all of that investment, basically by reselling it to one another. And that ATS is eventually going to take digital form. It'll be a decentralized exchange on XRPL, And our assets that are sellable will basically be digital tokens, securities basically in tokenized form on that digital exchange. So we're not at the point where we've obviously digitized your investments. Your investments are still traditional securities, but they are liquid, and we've started experimenting on this. We've got the ATS currently operating on 2 of our portfolio companies, 2 which I happen to love and who are represented on this stage, Polysign and Uphold. So we've started seeing the very, very first instances of folks selling a portion of their investments to get liquidity. I know some of you guys have done it purely as an experiment to get a feel for how the thing works. Others have actually done it because they had life events happen to them. And one of them actually called me a couple days ago and said, "Thank you so much for making that available, because this thing happened in my family, and honest to God, I really needed to get some cash, and you allowed us to do this on a private investment that is still awaiting an IPO." Right? So that's what the ATS is about.
That's excellent. All right, I have the same question now for all 3 of you, and you'll each have a chance to answer it. And if we have time, we'll look to the audience for some questions. But in 2014, the Wall Street Journal blew the lid off the Obama-Biden administration's Operation Choke Point, where the Department of Justice and bank regulators colluded and overreached their authority to close legal businesses that were deemed undesirable. They did it through pressuring banks and credit payment processors to close the accounts of people and companies that had not violated any laws without proof of wrongdoing. And many people today believe it's happening again on a much bigger scale against legal U.S. companies that use crypto technology for their product offerings. So my question is, do you think the crackdown on crypto-centric companies is an extension of Operation Choke Point? Or is it a way to get crypto companies out of the way for Wall Street monopolistic incumbents to come strolling in and take over? Or is it something else?
Wow.
What was the line? I won't say it.
Yeah, we could do that.
The audience say it.
Right. No, that's fun.
I'll take a shot.
Okay.
Go, Joe.
And by the way, any of the views I express are going to be Joe's and personal, not reflective of my company or the board, right?
Sorry, what is it?
They're his views alone, not the company's.
But, I mean, those of you that know me personally know that I'm an immigrant to America, right? I came here as a teenager. And I can't tell you that there isn't a day that I don't wake up and give thanks for the sacrifice that my mom and dad made to take me to this blessed country. It's given me opportunities and freedoms and, friendships that I would never have imagined, and in my view, wouldn't have been replicable anywhere else on earth, right? So to your question, Will, these instances that Will was describing, and we're seeing this again, honestly, in the Ripple situation, are clear excesses of government that are the farthest from the vision that an immigrant like me would have imagined and aspired to in coming here to our country. So I feel so strongly about this. I find it hard almost to put it into words. But anything that goes against the spirit of innovation and enterprise and, just the seeking to push boundaries and to try new things, and things particularly that bring people in as opposed to shut people out. All those things are so un-American, right? That it's unimaginable to me that we would allow our very own elected government to engage in those kinds of practices. So I'm very, very watchful for link to our shareholders, our partner companies and portfolio companies that we've invested capital in, our capital as well as our members. very, very watchful that they don't fall into that trap. And I would urge those of you who have voting rights and have elected officials to make your views known, because it's so important that we maintain America as an innovation economy and a center where ideas can be expressed and thrive and be acted upon freely by regular people like us. So that's all I'll say.
Would you like to go next?
I'll go. Those are beautiful words and a tough act to follow for sure. I mean, I guess to echo that, and crypto, blockchain, what's happening, this is a global situation, right? And so, we're only hurting ourselves in the United States by really suppressing all this stuff. And so, other countries in other parts of the world will get ahead of us, and I think that's a big problem. Yeah.
Jack, your thoughts, please.
Yeah, I would just add on to Robin's, I spent a lot of time, we've just had a recent DFS exam. I feel like, every day there's a new regulatory arrow coming at us. And I think that in aggregate, the regulators have good intentions. They're there to protect investors. I think a lot of the current friction and challenge is around a lack of education, and we need as an industry to continue to chip away at educating the regulators. But to Robin's point, just the crypto market specifically, let alone the digital asset market, is getting increasingly healthier in, just to name a few countries: England, China, Japan, the UAE, Brazil, Switzerland. So this is very much of a global market. The US can't stop the evolution and innovation that's happening. And so the US needs to decide whether they want to drive companies like ours offshore, or whether they want to wrap their head around it and embrace it in a way. The companies that we work with, and certainly our company, look for more regulatory clarity. I think it's one of the blockers that's kept institutions from really wading in to the space. And so having more regulatory clarity is actually a good thing. We're in the process right now of writing a comment letter to the SEC around our views around these proposed changes. So I think it's a more of a nuanced sort of view that we will get there. I think the current regulatory environment it will prove to be more of a speed bump than a total blockade, because I think ultimately the regulators will see the value in the technology and see the ultimate benefit around capital market infrastructure that will ultimately accrue to individual investors. And it can be done in a very safe and secure way, resulting in a better outcome at lower cost with less friction. And we just need to get their heads wrapped around that. I think it's inevitable.
Agreed. Excellent. We have a little over 5 minutes. I'd like to open. What's that? I didn't see it from here. Well, that's a nice segue to audience questions. So if there are some questions, I don't think Jack can hear you. So if they're intended for him, just keep them simple and we'll repeat them so he can answer.
Testing.
Oh,
3, 2,
good.
1. Prepare for liftoff. All right, fam, we're going to do some Q&A from the people, for the people, and by the people. And we've applauded them, but all of you should be proud of yourselves for being here against all odds. So let's give it up for the XRP Army. That's right. All right, so Mr. I, the cool guy, has 2 rules. I'm cool about it, but don't take the mic from me. I'll hand you the mic, and let's be polite. All right, we got Polysign, Uphold, and Link 2. They're businessmen. Crypto means business, so let's be polite. If you want to come up, or I'll try to come to you, but let's do this pretty efficiently.
And please state your name and where you're from.
David, I'm from Texas.
Yeehaw.
So the question I have is really positioned to link to. So as you know, the SEC is proposing to increase the threshold for accredited investor to $10 million. And I'm wondering if there's anything that Link2 can do or is doing to advocate for this community against that proposal.
Excellent question.
Yes. I mean, take a guess as to what our position is about that requirement, right? So long story short, the good news is that there are actually some legislators that are proposing right now legislation that moves us in the opposite direction, meaning, and there are two pieces of legislation particularly that are aimed at opening things up so that even if you don't meet the financial requirements for accreditation today, you'd still be able to qualify so long as you, in the case of one piece of legislation, pass a certain test, right, of financial literacy. And in the case of the other, as long as you pass a test and maybe meet or meet a certain restriction on the amount of your income or net worth that you invest in private assets or other types of alternatives that are open only to accredited. So we're big supporters of that type of opening up. I've had one-on-one discussions with Commissioner Hester Peirce at the SEC about those ideas, and we're going to, make our views known publicly. I'm writing a short op-ed for the NASDAQ magazine, and we're hoping that that gets carried by a number of other publications. But regardless, we're also going to pursue, and this is something that Hester Peirce actually suggested to me, we're going to actually go to the SEC with a request that they give us a no-action letter. So in the worst case, even if the broad legislation doesn't get passed anytime soon, we're going to try to get a no-action letter from the SEC that basically says, just for you guys at Link2, if you do A and B, or so long as you do A and B, we will let you bring in people that aren't accredited. So, wish us luck. Thank you.
Excellent response. All right, next question. Your name, where are you from? Dope jacket.
My name is Mel Carmine. I own a website called QFS1776.com. You all should go there.
The plug.
Great. Thank you. But anyway, my question is very simple. First of all, I like to give kudos to digital asset investor. Digital asset investor, you should call it digital assets, not cryptos. Crypto is what the cabal wants for us. They want us in the damn crypt. I'm not going there, and you shouldn't want to go either. Also, I wanted to know, do you know anything about Jassara Nassara? Anybody on the panel? Jassara Nassara, what do you know? Please tell us. Thank you.
Oh boy.
I do not.
I don't know what that is either.
Polysign shaking his head, nope.
I think a lot of people here do. We'll take the next question.
Next question. Man, this guy's trying to get us killed in here. Name, where you from?
Reggie Jackson,
Reggie Jackson.
Wow.
Redlands, California. This question's for Jack. Your institutional investors, without names of course, are they acquiring XRP?
It's not, well, it depends kind of, the type of institutional investor. There's a whole segment of institutions who are new to the space. The more traditional asset managers and wealth managers who are attracted for any number of different reasons to investing into crypto and digital assets. And the first asset that they buy is Bitcoin followed by ETH. Those are kind of considered the safe sort of plays. So when I'm talking to those type of investors, XRP is not, not the one that comes top of mind. That said, they follow where the market cap is. And so, as you know, XRP is not too far down the list there. And we're just now really starting to grow the XRP business. So I'll have a better lens into that, over the next couple months as we take on more clients with their XRP who are looking for a home in an insured, qualified custodian, et cetera. But it's not the first stop for new institutional entrants coming in.
Thank you.
Understandably, right? People look at Bitcoin as kind of a leading indicator, and so they just want a initial amount of exposure. I'm not telling you anything that would surprise you. I think Bitcoin and ETH are the first that they would go to.
So you're saying there's a chance. All right, next question.
What I'm saying is that you all, like me, who own XRP, are going to benefit when this suit gets ruled in Ripple's favor, and then...
Hell yeah! Poli-Sign! All right, we got 5 minutes, maybe a little less. Name and where you from?
Hi, I'm Joe Panico. I live here in Las Vegas. I'm a school teacher, and my life has been transformed in the last couple of weeks, and I'm so emotional I feel like crying.
We love you. Cry with us.
Yeah. So is it Robin from Uphold? Okay, I want to thank you because I'm putting all my money into XRP, and I know what that's going to mean. So I couldn't have done this without you and your company.
He's all in.
Yes.
What's the question?
So, depth of liquidity. Let's say a year from now, XRP is going to the moon, or we don't know where it'll be, but it'll be higher than 50 cents. So, does Uphold have the liquidity? Let's say everybody in this room is going to take 10% and go pay off their car bills and pay off their whatever, maybe their mortgage. Will there be a depth of liquidity with Uphold, or do we have to go to some other
No, you definitely
exchange?
don't have to go anywhere else. No, it's good. But I do want to describe, I'm like yelling, sorry. I do want to describe how Uphold works on the back end to sort of answer your question. So Uphold is not an exchange, it's a brokerage. And what we do is our systems hit every single DEX and centralized exchange globally, okay? So imagine you put in an order, our systems are running across the world trying to get the best price and to acquire the liquidity. And that's actually, to an earlier question, that's a big difference between what we do and what other companies do. Think about Coinbase, right? They have their own exchange. So when you're on the wallet and you're doing something, you're dealing with their exchange. We deal with Coinbase, we deal with Binance, we deal with all of the exchanges across the world, and that's what I think makes us different, and that's what hopefully answers your question around the liquidity. Yeah.
Okay. Yeah, they'd all be involved in the liquidity.
Yeah.
Not just one.
How liquid are they?
Yeah. Very.
I just want to say, Uphold, thank you for being transparent. Thank you. All right, guys, unfortunately, only one more question. I think maybe the next panel will take more questions, but name and where are you from?
My name is Mike. I'm from New York, and this is for Robin from Uphold. So how much longer is Gensler going to screw Uphold out of their New York bit license? Or is it not Gensler's fault? Because I tend to blame him for everything, even when I lock my keys in my truck. You know, it's Gensler's fault.
It's the number one thing on my personal wish list.
Turn his mic on, please.
Is my mic not on?
His mic?
It's working now.
Oh, good. Got to sit like this? We do not have our New York bit license, which sucks, and so it's my number one wish, and we're working on it, but it is difficult, and it's taken us time, and I can't even say exactly when we're gonna get it. Maybe you want to move to Las Vegas. I don't know.
Well, folks, thank you so much. Thank our three panelists.
Wait, everybody. If you don't mind, I have a VIP that would like to ask one question.
Okay, last one. This is for Jack. Jack, I know you guys custody institutional investors, and you are going to custody accredited investors, correct? Okay. Yes. And if I'm accredited and if I bring over all my assets to Poli-Sign, will we be able to collateralize that with a partnership you might have with a big bank? So I never actually have to have my assets leave your platform. I'd be able to collateralize them and, go from there.
Yeah, that's certainly the vision. I think that's the way capital markets are going to evolve, and I think it's an excellent question. Ultimately, we need the banks and other institutions who would provide some leverage or margin and then take that collateral. But you're exactly right. We would be a strategic link in that chain where we keep the asset under custody and you would essentially pledge or delegate it to another party who would give you leverage or allow you to trade or whatever. And we are having a number of conversations with other partners in the ecosystem about doing just that, for a number of different nuances with these proposed changes, but also more and more demand is coming from investors like yourselves who want to be able to do that. And so watch this space, as I say.
All right. Folks, thank you so much. Thank you, Jack, Robin, Joe. Just a quick reminder, all three of these companies are available on link2.com if you're interested in investing. I could be reached at will@link2.com if you'd like to converse further, all right? Thank you, everybody.